Oh man,
Okay.
guys, listen. I am a big fan of video production. You guys know I have just an affinity for high quality video production, but uh, Streamlabs just not my thing. So I'm a total noob, but you learn something every day, and I want to thank Andrew for guiding me over the past 2 days, just turning this noob into hopefully, ideally, a streaming machine. So now we're
Welcome
gonna
to the
go
kingdom.
back into the question here, and I want to, yes. So Citadel, we're gonna have to say this all over again. People need
All
to
good.
know. All right, man.
So Citadel, Kenneth Griffin, Kenny G. He has been the face of someone who you would love to bring home and punch. I would say Kenneth Griffin is the CEO of Citadel coming into Congress, pretty much lying, pretty much hurting the stock with his very presence in both the AMC and the GME saga. He has held short positions in Citadel, and he was the one that came in, swooped, and saved Melvin Capital, prevented the margin call, and now it lies as the big final boss. If Melvin was the mini boss, this is the final boss. And one of the things that we wanted to make sure you guys know is that they actually have a paltry, right? It's not a substantial position in AMC, but they do have a long position now through a combination of calls, puts, and long shares. That combination, of course, is something that we need to be able to dive a little bit more into to understand what are the two possibilities of what they want to do with that long position. One, truly hedge. They're a hedge fund, right? They actually want to be able to ride AMC up and perhaps, like the March 10th GME pump, be a little bit of a stinker, have our expectations drive up to the moon and then drop the price down, very similar to what happened during after hours and then pre-market for AMC's price action. But it could also be a logistical or a psychological game, right? It could be that they need to be able to have these shares in order to do X, Y, and Z, maybe deep in the money cycling of these of FTDs, something that we have talked about that requires some interesting, abnormal to say the least, price like trading of a stock back and forth. So those are the two possible options in my head of what Citadel could be doing with those stocks.
All right. So, Andrew, I want you to sort of kind of like recap what happened after hours and pre market. But before we do, I want to talk about price action currently because we talked about this yesterday where AMC just likes to hang in the 1381 1455 channel, and it is certainly respecting that channel. And it's a very wide channel. It's about 70 cents there, right? And I think for people who, woke up this morning, they got up at 5 in the morning and they're like, okay, way to go, AMC. And then market opens and they're like, what just happened? What just happened? And so I want to talk about the significance of the support at 1381 and also the significance of resistance at 1450, 1455. Because last night, when it broke 1455, it literally shot off. As you guys could see, we have a little action back there. You guys see after hours pre-market. So I'm going to let Andrew share his screen and just sort of kind of give us a breakdown of what happened. So let's take it away.
Here it comes. So I'm gonna bring my little handy dandy crayons in here. These are my favorite flavors of crayons, but it doesn't show up too well. So I'm gonna have a yellow crayon come up here. First thing you'll notice is that AMC's price action right before market close was actually cut off right here, right at the 14-ish, 1410 level of resistance. And from there, the first thing you'll notice is that this is the gap we needed to be able to bring us up to 61.8% retracement. All of that mumble jumble aside means that this number was the heights that we reached in March, and we need to be able to provide this number again in order to give the healthy growth that we need for AMC's retracement to the January squeeze, right? That would be 100%. Right now we're at 61.8. However, when that negative price action had a lid over the 1458, not only the day before that, but the day before that, just 20, 30 cents away each time, you can expect that is major market manipulation. And since hashtag AMC squeeze was #1 in Twitter, you could bet that not only the major players that are involved in AMC were involved in trying to press the price action down. That's why we saw 240% cost to borrow in the recent like Wednesday, Thursday of last week. However, when the bulls start to take over, this gap up provided us a slingshot in order to be able to bring us up symmetrically to the other side. So this is about a 80-cent gap up. That's what brought us 80 cents higher to our the very first outer space level of support and resistance. I drew this during the after hour stream that I had on my channel yesterday. And this is exciting because beyond 61.8, since the March squeeze stopped here and the January squeeze barely had any price movement that consolidated between 61.8 and 100%, this is no man's land. We have to basically guess how far the next level of resistance is. And having this gap up was, one, very optimistic, very good of AMC to be able to bring its price action up that high, but also a liability because since there is nothing to catch it on its way down, it then sunk below its own price action in the pre-market as paper handlers and people who had high expectations or people who are paranoid about news such as Citadel came into the market. And right now, we are actually having a small bullish trend upward to be able to push on this, the third part of this impulse wave. Impulse waves, I have a minimum of 5. So we are looking at another, what is this? From 1410 to 1430, so that's about 20 cents, then 20 cents, 40 cents more. So from 40 cents to 1410, another contestment of 1450 before the hour is out. All right, so that's a little bit of technicals just from the pre-market and the after hours and this morning's price action.
Awesome breakdown. All right, Andrew, look at her. AMC's just really a stubborn child, right? Just wants to get out and play. Running up 1420. She just wants to.
The price action is slowly becoming uncovered as true. And that's one of the major points of the research into FTD cycling, which is that each time they accrue more shorts and each time they dig themselves deeper and deeper, if you guys aren't aware of how this works, it's kind of like maxing out one credit card with another and then just keeping the due date of your payments off of each other by paying for one credit card, then another, then another, then another. So when that happens, though, your credit considerably drops. And that credit is the liquidity that Citadel has to be able to fight the short war. And we are bleeding them dry.
All right. Awesome. All right. I want to address something, guys. Super Chat is disabled for a reason. I don't want donations. If you guys are going to donate anything, why don't you donate it to your own portfolio and buy some more AMC stock? That's the way of the apes. Ladies and gentlemen, this is your future here. This is our future here. We've never seen a movement like this ever. And it's such an honor, such a blessing to be alive today, to be able to experience something like this, and the number of friendships that have been created in this movement. You know, I was a fan of Andrew. I'm a big fan of Trey. You know, and honestly, I was humbled and honored, you know, to be able to get on live with Andrew. Obviously, we specialize in very different things. Andrew is a TA master. Technical analysis is his thing. I am more focused on the psychology of things and the psychology of the market. And more importantly, I'm there to calm your fears, to keep you holding. That's really it. And so Andrew's going to provide the confirmation bias as what it would show in price action. And then I'm there to make you feel good like a stripper on a Thursday night when you got nothing else to do. So that's my job, guys. I guess that's the best way to put it, right? But no super chats, guys. Just buy more shares. That's what we're doing. So, Andrew, you want to go ahead and cover some Ortex data for us, see where we're at.
Sure, putting me on the spot, but let us pull up that Ortex. And let me share my screen once more. So if you guys haven't had a chance to be able to take a look at the premier short estimation tool, this gives us a better understanding. Actually, let me pull this off of large mode so that I can draw on it. One of the first things that you'll notice is that this is confusing. But if you wanted your own premium subscription, I have a link in the description of my videos that allows you to be able to catch on to daily live short interest data. So something that normally you would have to have a bi-weekly, like you have to wait bi-weekly, and then you have to have like a 2-week gap after that, because FINRA collects that data as an arm of the SEC. So this is the government collecting that data for us, but with no obligation from the short sellers themselves to provide timely or even accurate short interest data. So the Ortex goes out, it scans 85% of the market, and then it provides us some information that we can then use to strengthen our hodls and our rockets as well. Something that you will have noticed is on that I've been tweeting out is cost of borrow, right? The minimum here, we have the average here, we have the max, and this average was at 240% the week before. So that was the prevailing theory driven by me, which is margin calls the threat of margin calls had made certain short whales very desperate. And so in desperation, drove this cost of borrow rate up by trying to borrow as many shares as they could, even if it cost them a great amount, 2.5 times the amount it would to just buy a share. Why won't they just buy a share? Because they need that downward pressure in order to get out of their short positions, and it was worth the risk. And they YOLO'd in the opposite direction. They YOLO'd a short side of AMC. Nowadays, for AMC, this number has fluctuated somewhere between 9% and double that, so 18%. And what I am concerned about is this is back to status quo. The margin called smaller whales won't be in the picture anymore. And so the catalyst and the environment that AMC had in order to bring itself up to that price action, and then boosted by Adam Aaron's tweet that at the market offering was complete. All of that is starting to make an excellent prequel. But what will happen if more of these larger, medium-sized hedge funds start to get margin called, right? It's going to happen as the price of AMC gets crawling up higher and higher. This number has actually increased by 1%, which is a reversal from yesterday. This is the short interest rate. So normally we would have to make some pretty strong guesses about this number, which was at actually its low 10s during the January to March-ish timeframe. Very recently, I got above 20%, but then even more recently, it dropped 2.7% over the weekend and then 4.7% yesterday. So from there, we are looking at an SI percent that is still very healthy, especially compared to the Volkswagen squeeze. But at the same time, we have to ask the strong question of who is causing the short interest to decrease? And does Citadel still play the same game of being able to even register their short attacks on the Ortex scanner? Like, are they somehow able to get out into the 15% of the market that Ortex can't scan, for example? These are the questions that I'm asking.
All right, so let's talk about two things here. Utilization is still at 100%. So if we have hedges that are covering, how does utilization stay at 100%?
So that's one of the things that, again, if this is playing with OTC, like off exchange, if it's playing with dark pools, then we have unexplainable movements in the market that Citadel can then leverage its position as a market maker and then take, like they said in the third congressional hearing for GME, what's the point of a clearinghouse, right? To be able to take a bunch of money, take billions of transactions and turn them into millions, right? And when it comes to aggregating and then deciding which of these millions to execute on which markets, they have so much leeway to be able to change that in a way that only benefits their positions. That is a conflict of interest that one day we might actually be able to address. I think the easiest solution, but the hardest one to actually put into place, is to break up Citadel entirely. They play too many different roles in the market. And right now, every ape that I can hear is screaming at the top of their ape lungs, hey, forget about breaking them up, just break them down, right? Bankruptcy is on the way, Kenny, and there's not much you can do about it.
All right, we have a comment here. Refresh or text. There's a change to 95%, apparently, utilization. Do we see that change? No, we do not. Okay, so I think we're good here. Now, we see the short interest. We see a declining short interest at 87.5 million. And I mean, does that, uh, you know, how does that make you feel, Andrew? Like that we're seeing that.
You mean this one right here, 84.7?
87.55, the exchange reported short interest, and the interest percent of free float. Uh, let's go ahead and break that down for these guys because obviously those numbers are going lower, and so I guess that can be misinterpreted as well. The squeeze is losing its strength, right? You're going to hear that in the chats and the social chats, and again, you're going to have the trolls who are going to go ahead and try to use these numbers to cause that fear and suggest that the squeeze is not happening because of the short interest,
Exactly.
decreasing. Yeah.
That's one of the things that I want to be able to point out is, hey, those of you spreading FUD about this number, think about that Volkswagen squeeze, right? Think about how much higher this is, right? With double digits is immense in the world of the stock market. Any exchange that has 1 out of 5 bananas belonging to someone else, rehypothecated, given given to someone else, because one person that is outside of both of you decided to take your banana and give it to someone else, right? For the only purpose of driving the price of that banana to zero. That is a huge number, whether or not you think that 1 or 2% down is an indication of the strength of the squeeze. In fact, what I'd say is that I'm bullish to the T. I am looking at this number decreasing as a sign that gods bleed. Right? I mentioned this on my channel, but gods do bleed when it comes down to how can we see margin calls if no one has to legally report them. Like Archegos was reported because it was such a huge disaster. But the more silent margin calls, right? The little exchanges that kind of stay in business, but they have to give up a lot of their assets and then cover their short positions, that doesn't have to be disclosed to anybody. So in that sense, the only thing we can see is there are substantial daily short interest changes. And if there are, right, the 4.7%, for example, from yesterday, and Ortex themselves reporting that shorts are being returned, this is the only way that we can tell that we are doing something, that we are actually pushing these short whales, the smaller ones to be sure, over the edge.
All right. Thank you for that. And so, guys, I just want to say this, just for comparison, the Volkswagen short squeeze, the short interest was only 12%. I mean, yeah. So Lower Saxony and Porsche owned 94% of all shares available. And the hedge fund said, holy crap, we are short 12%. So what ends up happening in that situation is everybody starts running for the door, right? They're looking for the fire exits. They're saying, holy crap, we're screwed because the mathematics just does not add up, right? The mathematics just makes it totally impossible. Now, I want to get into the mathematics with you, Andrew, because there's a lot of talk of June 2nd being that, that day where we crucify the hedgies, right? And, and there's a lot of talk of, the naked shares and the synthetic shares, et cetera, et cetera. Now, I've said this, and I don't know if you want to confirm this with me, but synthetic shares have no voting rights, correct?
That is the tricky part, because you're not sure if you have a synthetic share. This okay. is, and that's not a troublesome part. It's that somebody has created a share that they have yet to locate, but they promise that they will. And okay. that's the tricky part of it, because it's just the same share as your share and my share, right? If you borrowed my share, and that was because the short seller decided to borrow my share and sell it to you, right? Both of us would be able to vote, but on the same share. And that synthetic share is a share that's floating out into the ether. It still will belong to somebody eventually, But if that FTD continues cycling, then that sum eventually becomes a lot further down, push the line.
Yeah. Okay, so I want to touch base because I don't know if you follow the guy, Lou versus Wall Street. That this guy is just super raw, right? He's the Howard Stern of the movement, I guess. That's the best way to describe him, right? But he did, the analogy was that the market did not anticipate that when there was a short created and you bought the share and I bought the share, the market did not anticipate that we were going to hold on to it for dear life. So essentially, it's sort of kind of like bank processing, right? So whatever charges you accrue on your card gets batched out the night, that night, right? And so, I mean, do you think that we've literally put the check and balance system on its head, and that's really what's driving the short squeeze, if that makes sense?
Yeah, tell me a little bit more about that check and balance. As in, what kind of angle are we getting there?
Okay, so check and balance is these shorts, these synthetics were created with the expectation that they would vanish into thin air, but they didn't because I ended up holding the same share as you, and I'm holding on for dear life.
Mm-hmm.
So for accounting purposes, now that share needs to be accounted for, right? Whereas it was anticipated they would simply just vanish into thin air, right? So, I mean, are we disrupting that check and balance system now? Because we're essentially taking a synthetic share and turning it into a real share. That's not supposed to happen, correct?
It is the exact same idea as I want to sell you a car, but my car is all the way in Germany. So I'll give it to you. I'll give you an invisible car right now. You can't drive an invisible car. It's like the anti-piracy commercials when you were a kid. Like you wouldn't download a car, would you? Well, you could if they were shares of a stock, and that's the point. They're downloading counterfeit shares, naked shorts that then are basically baked in nothing. They're printing money. And so I don't think I've had a White House advisor come on the show, right? From her point of view, right? And then asked me, what do I think about shorts in general and then about naked shorts? And I said to her, there is very little use for a naked share, a naked short in the world of finances, right? You can bet against a company. Even a short overall can be used in the checks and balances like you mentioned. But a naked short that's trying to skip over the process of it's like skipping over the fourth dimension, the time dimension. Like next week, I'll have a share ready. So this week, I want to be able to sell a share that I don't own quite yet. That makes no sense. You can't do that with almost anything else in the market. You can't just drink a glass of milk today because you think you'll have it tomorrow. So that's the main problem with the checks and balances you mentioned being thrown out of whack. The fact that they can not only take these, cause them to FTD, and then cycle them through it, never delivering on these shares, is the problem.
Okay. And I guess the next question, I'm going to put you on a hot seat, Andrew.
Please.
Is 100K a meme, my friend?
100K is not a meme. I don't understand. Well, the title of the video is 500K a meme. And so now that is also not a meme. So that's the point of being able to take the theoretical and then lay it into the practical. Practically, you go into a desert. What are you going to do, right? You're going to drink some water, and then you're going to pay whatever it is to drink that water. You must. It is coerced. And that is the definition of a squeeze that I go by. Is that when people say, oh man, X, Y, and Z stock is squeezing, oh man, AMC's price action today squeeze, right? You are not squeezing unless there is coerced buying involved. And that is that throws off the entire market's checks and balances, because there's never supposed to be coerced buying until very recently, right? Short squeezes may have been an older phenomenon, but gamma squeezes were invented as a definition pretty much this year, as of 2021, when GME and AMC experienced their gamma squeezes in January and March. The point of the matter is that both of these require you to name your price as the stock gets higher and higher in value. When a margin call happens, and I've coined this, the mix squeeze, the margin call squeeze, you have to go to a company and ask, hey, knock knock, do you have any GME or AMC shares for me? Because I really need to buy them. I owe my shareholders, the people that I sold them to, a naked share that I now need to deliver. If no one has them, and the only people that have them are apes, you can expect that the greedier apes are going to be able to get their orders executed on the way up, and then the truly virtuous, the infinite squeeze apes are going to be able to name the highest 100K, 500K. So maybe the answer is better is that can you survive 500K, right? Is 500K a meme for you? Because if you're the greedier apes in the bottom, selling on the way to the top, fortunately paper handing, right? You're never going to see 500K.
You bring up paper hands. We love to say the word paper hands, and followed by another, well, I can't say that word, but don't be a paper-handed bleep, right?
I've never said don't be a paper hand. I just say scissors in the chat right now. Scissors in the chat for the paper hands.
I'm gonna say it. Don't be a paper hand. All right. And look at if we look at the price action here, over after hours into pre-market, obviously people were selling. Now, are those paper hands or are those opportunists that just don't have that, that the sentiment towards the AMC that we do? And I guess is that something we should expect continually as we move up through price action? Because obviously, the higher the price, it will deter, the swing traders and the day traders from jumping on in, because it is becoming too expensive. But I mean, do you foresee a lot of these type of swings happening?
I would expect that paper handers, day traders, people who come in to make a small amount of money. Like I would say, instead of small, let's just put it as it is, an embarrassingly small amount of money. They are here because, one, everybody wants to say they made money off the AMC squeeze. Right? They want to be able to jump on and say, oh, look, bragging rights, right? Whether you're a high schooler or you're like a 43-year-old, like 50-year-old middle-aged person going out and saying, look, honey, I bought a stock today and I made money. Everybody wants to be able to have that tiny margin, right? That tiny margin is not what we're going for. It just doesn't make as much sense as the infinite amount of money that you can make. 500K, not a meme. In that sense, people who jump on, like if you have family members, you have friends, your circle can expand to include people, the message that you should be able to jump out and say, hey, Gabe is telling you here, Andrew is telling you here, if you are trying to day trade this stock, you're going to have a bad time, right? You're going to have a bad time and you're going to mess up the stock for everyone else. So it's a lose-lose for everyone, especially you.
It's a lose-lose. All right. So again, we see price action just really staying strong in that channel. And so I'm going to share something with you guys, right? I've literally married AMC. AMC. She has been a constant in my portfolio ever since, the DD and then the confirmation. And again, following the likes of you and Trey, she has been a mainstay. However, as I said yesterday on your live stream, right, you have to know what you hold, guys. And I will tell you this. I hit it and quit it. That's the way I trade. And that's the way I've traded pretty much all my career. I'm in there. I'm making my 15-20%. I'm getting the hell out. But you have to respect what you hold. And for the OGs, obviously, you respect what you hold. And for the new apes, you have to respect the OGs and what they're saying and get your confirmation, but also learn to respect what you hold. You are holding something that's far bigger than just, $14 price action or $100 price action, 1,000, 5,000, 10,000. At the end of the day, the statement that would be made and just the transfer of wealth, I just think it's mind-boggling. It's mind-boggling. And who would have ever thought it was a movie theater that would bring us to this point? It was GME and AMC. Yeah, those guys, they're going to put Wall Street on their heads. Like, who would have ever thought? It's really, really wild, because you would think someone like a Tesla, that would be the company to do it, right?
Exactly.
And
People think.
also on Tesla, uh, our hero. We've all seen the movie Short Squeeze, right?
Hmm.
Michael Burry decided to take a $480 million short
Love the Big Short.
against that's wild. That is wild to me. And we'll probably get off track a little bit. What does that spell for the guys holding Tesla? What do you think sentiment towards Tesla is?
Well, the first thing is, I'll cover Tesla in a second, but Michael Burry is playing the hedge fund game exactly like Kenneth Griffin is, in like the opposite direction. Well, actually, no, it's the same direction. He was shorting the stock market. Kenneth Griffin is as well, right? Kenneth Griffin might think he's the Michael Burry in his mind. He like looked at these two stocks and he said, "Oh, I'm going to destroy them, right? They're going nowhere. I'm going to bring them to zero, and then I'm going to make a ton of money for my people." The people in which I'm mentioning is people who make $200,000 the past year, and then this year, or if you don't have if you don't have $200,000 this year, the year before that, and this year, you can also just have $1 million lying in a pool, right? That's the only people that can afford to invest into a hedge fund. So he's taking that money that doesn't belong to him and saying, "I'm going to put it all against the GME and AMC like race because I'm the Michael Burry in my mind, right? I'm the superhero. Nobody thinks that they're a villain." Although if you Google Kenneth Griffin Buzz Lightyear Halloween costume scaring a little girl, that might just make you a villain. But in that sense, you are making history in the same direction that you think like a popular person did in 2008, and then they made a movie about him. He was probably thinking about that movie, but his name in lights, right? Can't wait to see whoever plays me in the movie, and yet he turns out to be a pit barking up the wrong tree. I think that that's one of the really most important things in kind of psychology to remember. And the people that might not have expected it, right? That's why it makes such an enticing story. So the Teslas of the world are the meme stocks of Wall Street bets, like before there were like truly meme stocks of stocks that like essentially are only in an advantageous position because a predator like Citadel has come in and tried to attack it. Right, Tesla has arguably a great product, a great fan base, a loyal fan base, and a production line that is now spreading across like multiple different like factories, not just the Gigafactory that they're planning to build out here over in the West Coast in Nevada. Right, this is a different beast, and that's why it is more of an enticing story for the news headlines, for the people who have jumped onto hashtag AMC squeeze. Right, new retail investors coming in. That's what makes AMC and GME so irresistible.
Yes, yes. But when we talk about Tesla, I mean, that's a different animal. We're talking about a $469 billion company. I mean, how are these guys just really just detached from the world and thinking, like, we can short these guys. We can literally do this. You really have to have, like, balls of steel to think, okay, well, I'm going to short the hell out of Tesla. You really have to have like a really big pair if you're thinking, all right, we're going to go against a newly formed superpower, which is the apes here. We are now the superpower. We are now the movers of Wall Street at this point. I mean, are they just, is there a sense of arrogance, you believe? On their behalf, or do you feel like, okay, well, whatever, we're gonna get bailed out anyways, right? So if this goes bad,
I've had Trey's trades on the show multiple times, and when I ask him why didn't they cover back when the stocks were trading at like $40 and like $5 a piece, right? It was trading for like a month at that range. They could have covered at any time, and the answer: pure greed, right? Coming back into the equation, I'm Michael Burry. I'm not supposed to be able to cave now. I'm not supposed to take a tiny L. I'm supposed to take a huge W. And so I can still see it. He still sees it. And the reason why it's so important to be able to pay attention to Citadel, buying up a long position in AMC, is to be able to understand what does he see. See it from his point of view, right? If he's not a villain in his eyes, you need to understand that he is capable of doing a lot more if you know if you know in your heart that you should be right.
Well, I guess, yeah. Sometimes I guess you fool yourself, right? The guy's making something like $63 million a month. $63 million a month, right? So, yeah, I guess ego does come into play. He does feel he should be right, you know.
Mm-hmm.
And I guess let that be a lesson to you guys. I've said this in my previous videos. Make the money. Don't let the money make you. You know, I've done very, very well in my life, but I'm still wearing Star Wars shirts. Come on, man.
Hey, I love your
I'm the simple guy that just, I stay under the radar. You know, the only time you're going to hear me is when I'm in my Corvette because she's loud as hell. And by the way, I have a name for her. I call my Corvette Cardi B, guys, because she's sexy as hell, but she's just loud. Loud. And there's nothing classy about loud in the world of exotics, but she's just a thrill to drive and a lot of fun to be with, right? And then obviously I have a BMW X6, and that's just more of like my touring vehicle. But outside of that, I live a very just a low key life, you know, and prefer it that way. I do have an affinity for cars, and at one point women, but we don't have to talk about that. But yeah, guys, listen. 500K is not a meme. So Andrew, I mean, do we have time frames? I know, you know, we all hate being asked that question. You know, do we have a time frame? You know, when's this going to happen? I guess the first question is, have we all agreed that this is the beginning of the squeeze? Because usually the duration of most squeezes on average are 10 to 12 days, at least relative to the previous squeezes. When does the clock start ticking, do you think? Day one of the squeeze. When does that happen?
I would say that first of all, we have to retrace all the way back to 100% of the January squeeze, right? That the flash rip and the flash dip of that January squeeze basically gave us no data in terms of supports or resistances to expect on the way up, and also it was just not enough time to be able to consider itself like a full squeeze. Because when the short squeeze lasted for Volkswagen, that's like the golden frame of like how we can tell a squeeze should be able to last anywhere from 3 to 5 days to like multiple weeks. But the gamma squeeze in January, remember, a new invention that we have started to like identify within this year alone, only lasted like 3-4 days. So from there, we are looking at a definition of two different kinds of squeezes. If another gamma squeeze happens, you can pretty much bet, very much like March 10th and GME, where we ripped all the way to 350 within the day and then dropped out to 170 within the day and then came back to somewhere between those two numbers. It might be intraday, which is why it's really important to be able to head on over to channels like yours, like Gabe, smashing that like button so that Gabe's message gets out, and then checking out Professor Meatball's channel as well, which is in the description as well. Being able to help yourself educate on these signals, even midday during no man's land, like you said yesterday, right? The times of like lunchtime for these East Coast traders, that could still be an opportunity for major changes. And this is the theory that I'm starting to develop. When the hedgies go on lunch or they go to sleep, you can see much of the price action for the last historical squeezes, close to the squeezes, happened there. Because yesterday during after hours, right, it was like a few hours, like an hour or two into after hours before anything exciting started to happen. And same thing happened with the midday for the March 10th GME debacle, where it was like everyone should be on lunch, no one should be looking at the markets, and yet, boom, all the way to 350.
Gotcha. So, with that being said, hey, Andrew, I want to thank you for coming on board. And Professor Meatball is just the chillest dog I've ever met in my life. Yeah, he heard me say his name, right? Just the chillest dog ever. And, I look forward to having you again, and continued updates, as we move further along, as we enter the 20s, the 30s, the 40s. With that being said, guys, most of the price action you're going to see is going to be between 9:30 in the morning and 11 o'clock in the morning. And then just relax. I guess in the words of Lou, just relax. You're going to see some price action happen again starting power hour, and then you're really going to see, as we saw yesterday, some after hour movement, that really gets you excited, right? But please, 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 your mental health is important. And I really think that mental health, it's going to be the battle of attrition at this point. You
Oh
see,
yes.
and I just really want to promote mental health. Guys, listen. Either you're watching YouTube and you're getting confirmation from us, and you're just going about your life. Don't sit there with your Repo app or your brokerage app open and just looking at the price go up and down, up and down, up and down. You do not have telepathic powers. You are not going to make the price move. All right. Set alerts. Definitely set alerts. And please, no stop losses.
Yeah. There we go. Setting out the right message.
Please, no stop losses. Like we've seen manipulation up until this point, and you hear a lot of people saying, "Hey, the hedgies were stop loss hunting." And you believe that to be true?
I think that stop losses is like a mechanic of like a busy environment, someone who might not be able to like pay attention to their phone, but it absolutely does not exist within the health ecosystem of a squeeze. You're only going to hurt yourself by being thrown off the boat a little too early, and you're going to hurt everyone else by paper handing accidentally.
There you go. There you go. One more question before I let you go. One more
Sure.
question.
Before
Right.
your question, I do have an announcement. I do want to be able to announce exclusively on this show for the first time. I am on my track to 90,000 subscribers. If we get there within this month, I'm buying $10,000 of AMC and GME, and that is something that I want to be able to, one, establish on this show, and two, thank Gabe for his time, because at the same time of building out these like more technical analyses, you need a chill, strong figure like Gabe to be able to like make it simple and make it like amenable to the people who are just jumping onto the hashtag AMC squeeze. So I think your service to this cause is huge.
Oh, thank you so much. And again, yeah, I'm a big fan of yours. With that being said, exit strategy.
Uh-oh.
Uh-oh. Uh-oh. Here we go. Exit strategy. What does
Exit
Mr. Meatball, Professor Meatball say about it?
I'll zoom in the meatball and see what he has to say. Meatball, you can go anytime. Take your time. Okay, he's a little shy. I'll just say whatever he says to me every night, which is sell on the way down. So once again, we're towing that fine line of telling you what to do. We can't tell you what to do. We're not financial advisors. But what we will say is that when the squeeze is televised, right, whether or not it's going to be televised on mainstream, I keep putting it out there that it's not going to be. When that squeeze is happening, your only solace is going to be able to look at the YouTubers and the DD writers that you have come to rely on. But do not trade like those people. You have your own point to get out. Piecemeal, right? Portion by portion, piecemeal of your position. Don't pick a position and get out, because mathematically, statistically, that's the easiest way to lose out on huge gains, or just become one of the saddest paper handers in history, not knowing that a million was only on the road to 10 million, or 500K was only on the road to 500 million, right? So you don't know where the top is going to be. Sell on the way down, piecemeal, or to sell on the piecemeal after you get to a certain point of life-changing money, right? This is not only money for you, this is for all your loved ones, right? All of the posterity after you that comes to the greatest wealth transfer of all time. It's basically a ticket to Noah's Ark. Don't throw your ticket away.
All right. Well, thank you for that. I think we all agree on that. We all have very different exit strategies, and obviously, just choose one that works for you. If you do reach, in fact, life-changing money, just take it. I guess I'll share an experience, right? I think as traders, greed has always gotten the best of us. So I think when you get to the point where you're like, my son, my daughter, my wife, my grandchildren, their grandchildren, their grandchildren, and their grandchildren, meaning several generations. When you can count your money several generations down, now you're in the ballpark of like, okay, and you piecemeal it, just like you said, right? You do not take your entire, no, you don't do that. You piecemeal, 50 here, hell, maybe 25. I'll probably just drizzle 25 on the way up, I mean, yeah, just 25, whenever I feel like it, right? I'm holding about 2,300 shares. It's really not much, but I'll drizzle 25 on the way up, and then obviously drizzle on the way down. Yeah, yeah. There you go. Somebody make me a meme right now. Screenshot this, right? There you go. All right. Hey, man, thank you so much for your time. And by the way, guys, make sure you check out Ape Crayons, also a community that I built for you guys, and just tons of cool content, ape content, and it's absolutely free. So you guys go have fun and go chat amongst your peers. This is Gabe. I'm signing out. Andrew, my money, you want to do your sign out? How do we do the sign out on this channel?
On my channel, I say thank you guys for joining. For now, but not for forever. I guess we'll see you in the money. Peace.
And I'm just so damn simple. It's